What's going on, everyone? We hope you had a great day in the market today, but even if you didn't, that's all right. In today's video, we're going to cover everything you have to know to make tomorrow a better one. But looking at today's action, around 74% of stocks in the S&P 500 closed down in the red, and we have some pretty big news to talk about, especially with Meta, as they unveiled some new virtual reality and augmented reality developments with the headsets that they've been working on. But we also have a lot to do and talk about with gold as they cracked their new all-time highs yet again. On top of that, we have some interesting news with Bank of America and how Warren Buffett is selling even more of this company. On top of that, Jerome Powell is speaking tomorrow, but not in the way you think. So either way, we have a lot to talk about today, so stick with us all the way until the end. But besides that, Tom, let's jump right into it.
Yeah, today was another one of those days where the SPY ended up chopping back down. And I will say this morning, Mike, I'm sure there was a lot of traders that actually got faked out because the SPY started breaking above the resistance from the past couple of days, right around 571.40 to 571.50, but it didn't last long. As we got closer to 572, the SPY started turning right back over and ended up breaking through support and closing the day down in the red. That heat map was definitely a pretty red heat map, Mike, but there were a few stocks out there that were green. You know, Nvidia continued on their powerful run. They were up 2%, but Meta, which you mentioned, was up 0.88%. Now, this stock isn't a stock that's, it's not up 5% or anything like that on the day, but Mike, I will say these developments with these AR glasses that they've been developing are extremely, extremely interesting here, and they also unveiled one of their new Quest headsets, and I'll say this, Mike, the new Quest headset is a lot cheaper than Apple's headset, okay? So the new Quest 3S comes in at around $299. Apple's Vision Pro headset is $3,499. I mean, there is a huge difference there, and a lot of the same features are in both of these headsets. But like I said, though, Mike, there's also the glasses, and the glasses are extremely interesting. And even Nvidia's CEO had been looking at the glasses a little bit today and was kind of gawking over them.
Yeah, so either way, Meta is actually showing some pretty good progress with their virtual reality and augmented reality hardware, which is really good to see, and the stock definitely liked it. And Meta is one of those stocks out there that has just been ripping higher over the past couple of years, and it actually made brand new all-time highs today. So definitely keep a close eye on Meta for tomorrow. Like you said, Tom, the stock is not, let's say, ripping to the upside by 5%, but it is moving in a strong way, and it's one of those stocks that it's special. We could put it that way. Like, when it moves, it tends to move with strong momentum. They're a powerhouse company, and they're at all-time highs. So they're definitely worth keeping on watch, because when they do have important news, just like we saw today intraday, the stock does tend to move in a powerful way. So keep a close eye on it. But Tom, it's hard to almost compare anything else to gold recently, because that is the definition of just true strength and momentum. So what's going on here?
Yeah, it's been awesome, right? And gold's not something that, again, it's not going to go up 5% in a single day, but I'll tell you what, we're on the 5-minute chart today. Gold did close down in the red slightly, but it made a new all-time high this morning whenever the market opened, and you got to love it, Mike. We've been talking about gold for a long time, and I'm sure that there's been a lot of traders out there over the past few weeks and over the past month that maybe look at the SPY and they're like, oh my gosh, yeah, sure, the SPY is really choppy. It's been hard to trade lately. All you could have done is just really swing gold, right? Gold has provided a great opportunity here with everything going on in the economy and the market, but it was amazing to see gold make that high, and I will say it did fall a little bit towards the middle of the day, but it did recover up towards the end there, which was a good sign.
Tom, I don't even know how many times we've covered gold over the past couple of months, but here it is again. Gold does tend to do pretty well when we see rate cuts, which is what we just had recently. If you are not already exposed to this massive gold uptrend, honestly, it'd probably be better to wait for a pullback, considering how much it's already up. But the main reason we're still talking about it is to keep it on, you could say, the radar overall, so that if a pullback does happen, you could potentially catch it. So GLD is great for gold, but there's also GDX, which follows gold mining companies, and then there is SLV, which follows silver, which hasn't been as strong as gold, but it does tend to move in a pretty similar way. And when the precious metals market does truly pick up like very strong momentum, silver actually has more like explosive potential than gold.
Yeah, it does. Like that move yesterday was pretty insane. I think it closed like 5% on the day, and pretty much from the opening price to the high, it was up like 4%. So there's definitely that good movement there with silver, Mike. And there's a lot of stuff going on with the economy right now that seems to be worrying a lot of people. And in my opinion, that's one of the main reasons why gold is doing what it is. I know a lot of people view rate cuts as bullish, and trust me, for the markets, you can tell it's been fairly bullish so far, right? But I will say though, at the end of the day, it sucks to see the jobs market getting the way it is, right? Like you're starting to see jobless numbers pick up, and the unemployment data is just looking pretty rough in the short term, Mike. And we have a pretty cool chart here kind of showing that unemployment rate and actually the labor differential here.
Exactly. So basically what we've seen over the past couple of months is, especially when we look towards like the right end of the chart, we're starting to see the unemployment rate really tick higher. And what we see with like the darker line essentially shows the labor differential, which essentially shows you the difference between the amount of people who say jobs are plentiful compared to the amount of people who say jobs are hard to find. So when we see that dark line shoot higher, what essentially that is saying is more and more people are saying it's, hard to find jobs out there. And as you can imagine, it moves like right alongside the unemployment rate. Either way, the key thing to keep in mind is that when we see the unemployment rate start to pick up like it is now, and when we have people, saying it's harder to find jobs, that is not a good sign for the economy overall. And every single time we could see throughout history on this chart, when we saw a big increase in the unemployment rate or a big hit in the jobs market, a recession followed shortly after. So understand that this data is not like data that updates every single day. Naturally, the unemployment rate is, a slower moving data set, but we like to show things like this to, I guess you could say, paint a fuller picture about the market and economy as a whole.
Yeah, exactly. A lot of people out there are like, well, hey, why are they even cutting rates right now? Inflation, the fight's not done yet. Why are we even cutting? And it's mainly because of what they're seeing with the jobs and the unemployment and everything out there. And that factors into obviously the market, and as well as some of this good precious metals movement that we've been seeing lately, right? And I would even go as far, Mike, to say that it factors into even housing and everything else, because, if people can't get jobs, they're not going to be buying. That's for sure. So, there's a lot that could come into play if this does end up spiraling even more out of control. And Mike, I would say the big fear for me is that right now the unemployment rate's fairly low, but it's starting to tick up. Look at what happens whenever the recession finally hits. I mean, we start to see it just pick up in such an exponential rate that, that's what really worries me, because, every time it ticks up a little bit heading into that recession, but once we kind of actually get into it, it starts to fly a lot higher. And we're starting to actually see that labor differential shoot up in such a crazy way that I don't know. It's definitely worrying in the short term. That's for sure.
No doubt. So we'll continue to monitor this pretty closely. But another thing that we have to cover is Warren Buffett's recent moves with Bank of America. So Berkshire Hathaway has been on quite the selling spree this year, as they sold half of their Apple position, but they've also been selling a lot of their Bank of America shares as well. So he recently just locked in only $862 million in profits from some Bank of America shares. And while this news by itself isn't the end of the world, because there's nothing wrong with just profit taking and de-risking, especially in an economic situation like we're in now, it does say something though when you have Warren Buffett continuously selling Bank of America shares like this, and at the same time, Bank of America has been struggling a decent amount just in terms of price action. It hit highs of around like a little bit over $44 a share back in the middle of July, and ever since that point, it has been struggling to truly pick up momentum. So I am a little bit skeptical of the, I guess you could say, bank stocks right now, and I'm going to talk about this more in depth as the video goes on, because I actually have a pretty good setup related to this.
Yeah, and I actually like the bank stocks down quite a bit myself, Mike. I would not be surprised to see him fall off a little bit more. And, Bank of America itself actually has a little double top going on the chart right now as well, around 41. And in the past, we've seen a lot of hits around that $40 mark as well. And for it to continue to reject there is definitely a bad sign in the short term. And, we've actually seen a couple big money plays on a Bank of America. Now, I know that one expired, but either way, Mike, it's pretty interesting to see the big money, especially like this one, getting like a January 17th, 2025 44 strike puts. Like that's a pretty interesting play all the way back from July, right? They pretty much sniped that at the very top. So I'm still just watching Bank of America and the banks to the downside. But Mike, whenever we talk about banks, and gold, we've talked about China stocks quite a bit recently as well, right? I know today China stocks didn't quite hold up as much as I guess people would have hoped, but at the end of the day, Mike, China stocks are still extremely high over the past couple of weeks, and today's pullback was, I would say, fairly negligible compared to what it could have been considering how high they've ran.
Yes. So like you said, there's been a lot of talk with Chinese stocks lately, and just like yesterday, the FXI, a big money trade that was just a monster trade of $6.7 million. When we see a pullback like we are seeing now, that is kind of expected when you have, Chinese stocks. Like they're just naturally more volatile and crazy than most normal big tech stocks. But we wanted to recap of, this area of the market, because a lot of times when you have an area of the market that is seeing very strong inflows and lots of buying pressure, when there are dips, those can end up being like some of the best reward to risk opportunities out there. So basically with Chinese stocks, assuming that you like the setup to begin with, if we do see a continued dip here, that could be a pretty decent opportunity. So definitely keep it on the radar.
Yeah, and one thing that I'm looking at kind of with FXI, Mike, is, if we go back to some of these bigger runs with FXI in the past, I mean, following some of the bigger green candles is where we actually started to see some of that dip, so to say, come in, right? Because there's just such a big day that it might cause a bit of sellers to come in the short term, but the uptrend could definitely still continue. And whenever you zoom out here, for the longer term, there's still a pretty good, I would say, overhead range still that these stocks could definitely get back into. Like with FXI, I really like $33, and with BABA over the next couple of months to, towards the end of this year, looking at maybe like 105 to 110 above 100. I think that would be pretty good here to see that continue. But of course, not every single day is going to be green, and there's going to be those pullbacks mixed in, and that's where, being adaptable, Mike, but also having a good plan going into these big money plays is crucial. Like a lot of people I see, they just buy the big money play, and then they're like, well, the big money's buying, I'm just going to hold it forever, right? Obviously, guys, have a good plan going in and keep that risk to a minimum.
Yep, trading without stop losses is like driving blindfolded. You just don't want to do it, right? For multiple reasons. But good stuff there, Tom. But as we look at SPY right now, it's at an interesting point because it's kind of just chopping around. There's a lot of opportunity in the market right now with specific industries and specific news events, but SPY has been pretty much stuck in the short term. So with that being said, what is your take on this recent price action, and what are the key levels to keep in mind for tomorrow?
Yeah, right now, my take on SPY isn't going to be very good for the bulls here in the short term, but, things can change, continue to be adaptable in the short term. But what I'm actually seeing is with this all-time high, right around 572.80 to 573, and the way that we pulled back today, I'm looking at this as a bit of a lower high in the short term and a rejection off of resistance. So until we start to really re-break back above this level, I'm not going to be too bullish. I think that the move to the upside would be pretty minuscule at that point until we do see a true breakout. But here's what I'm looking for tomorrow is a real breakdown below the low of day today, right around 569. If we see that happen, I think there could be good opportunities to the downside out of not just the SPY, but possibly many other markets. Now, if we don't see that and SPY ends up staying in the range, there can be scalping opportunities to the upside. Just keep in mind that with all the chop, you need to be very careful, and you need to also realize that the moves aren't going to be as exponential as you're used to. You might have to be getting in and out quicker and maybe taking profits and, stopping out a little bit quicker as well, because these moves just aren't as exponential as like what we see on a true breakout, for example.
Yep, and what's so important is being willing to adapt to changing market conditions. The market we are in right now is completely different than the market we were in 2 weeks ago, and that's completely different than the market we were in earlier this year, right? The market's always changing, and understanding how the market is different right now compared to how it was previously is very important. Some of the key things about the current market is that the SPY overall is pretty choppy, and it's just pinned right now. Most of the action and opportunity has been in areas of the market besides the S&P 500 as a whole. Gold would be a prime example, but even with more stock-specific examples, of course, you have NVIDIA and their recent uptrend. You have Meta and their recent bullish price action today. You have the Chinese stocks that are moving in a pretty strong way. You have bank stocks, which are seeing a good amount of profit-taking and selling pressure as a whole, but mainly the action has been with individual stocks specifically, and then just like other areas of the market. So consider focusing on specific areas of the market right now rather than SPY, because it has been a chop fest.
Yeah, exactly, Mike. And, some of these other parts of the market are amazing, like NVIDIA right now, up 2% today. I know there was a lot of people that banked on that move this morning. I love the way that NVIDIA is looking here in the short term, the way it's starting to break out above that recent range. Today, it did run into resistance around 125, which is going to be important. We're going to be talking about that a little bit later, but there was like 1 million shares stacked up at 125 on NVIDIA. But I know, Mike, that these individual stocks have been a lot more fun, and especially the easy thing to do lately is has been to swing some of these metals, right? Like as gold's been running, it's been fantastic over the past couple weeks, and some of these breakouts, I hate to say it, have been pretty easy to see. Like clear range breaks here. It's not like these have been like trades that take like a scientist to figure out or anything.
Yeah, and gold kind of moves like a turtle too. It's not like it doesn't have that crazy aspect to it like NVIDIA or some of the Chinese stocks. But Tom, we can't forget that the big man, Jerome Powell, is kind of speaking tomorrow. So what's the story here?
Oh, yeah, I almost forgot. So at 9:20 a.m. Eastern Time tomorrow, he will be speaking at the 2024 U.S. Treasury Market Conference. But I will say this, it says it's just opening remarks via a pre-recorded video. So we'll see how the event goes. Maybe Powell will say something in the pre-recorded video. I really doubt it. I would bet you this is going to be a big nothing burger for tomorrow. But more importantly tomorrow, Mike, 1 hour before the market opens, we are going to get the durable goods orders and the GDP growth rate, which is going to be pretty interesting there. I know the GDP growth rate can cause quite a bit of volatility sometimes, especially if it comes in like with a high differential from the forecast.
Yeah, and then also we have Costco earnings in after hours tomorrow as well. This company's been crushing it over the past year, and they're pretty close to all-time highs, so we'll see what they can do. But besides that, let's jump right into some setups and predictions. A stock I'm watching very closely right now is JP Morgan, and it is to the downside. Basically, JP Morgan has been showing some relative weakness over the past couple of weeks, but nothing too crazy as of yet. It's in the process of forming lower highs, which is typically like a bearish signal. At the same time, we are seeing relative weakness with the bank stocks as a whole, especially as Warren Buffett is selling out of Bank of America quite a bit. The S&P 500 is mostly pinned, so there's not like a ton of strength to help lift these stocks higher right now. And then just looking at the recent price action of JP Morgan, I really like how it showed a lot of strong selling pressure earlier this month, and it is now to the point where it has popped up, but it is still showing that weakness. So like a stop loss can be placed right around like that 213 to 214 area, and in the worst case scenario the stock gets back above that, but in the best case scenario we see a retest of like 205 and potentially even 200. Either way, I really like this reward to risk skew, and I'm excited to see how this one does over the next couple days to like the next week or so.
Yeah, this is awesome looking here in the short term, Mike. And, a lot of people might be looking at this to be a bit of a dead cat bounce situation here with JP Morgan. You go out to the daily chart, and like you said, it's had a fantastic year this year. But as it's tried to pull back here on this recovery, it started to turn back over here on this resistance pretty perfectly. So I like the play quite a bit. I'll definitely be watching it down myself as well. With my first play, I'm looking at PayPal, and PayPal is actually straddling support here right around 77.33. It tried to fake out this or break out this morning, but ended up faking out a little bit, kind of like what the SPY did. So I'm really going to be looking for a pullback tomorrow under the 77.20 support. PayPal is pretty overextended over the past few weeks. I'm just looking for a little pullback, nothing too crazy, more of a scalp as we get under support. But yeah, that's what I'm looking at for PayPal in the short term. If support does hold, maybe adapt back up, but I'll probably just look at a different stock at that point.
All right. Another stock I'm watching pretty closely is Intel, and it is to the upside. This stock has been gaining more and more momentum in the short term, and it is still pretty oversold in the grand scheme of things. Looking at Intel, it is starting to put more pressure on its recent highs, and we're almost to that $25 mark, which is pretty big, as it has been a pretty key level in the past, and the stock has bounced off of that level multiple times in 2023 and 2022. So basically the stock is moving in a strong way. I really like the short-term price action, and I would like to see a retest of that $25 resistance level.
Yeah, 25 is definitely huge there. That could be a great target. I'm sure there's going to be a lot of volatility as Intel gets close to that over the next couple days, so keep them on the radar. With my next play, though, Mike, I'm looking at Tesla here. And whenever I'm looking at Tesla, there's a huge resistance overhead at 260, and that's going to kind of be a good target for tomorrow. So I'm looking at 257 in the short term, which acted as a pretty good resistance today. So if we're able to get a good break of that 257 area, target 260 overhead. I will say, though, there's a lot of shares at 260, like 458,000 of them stacked up there. So that's quite a bit, right? The only stocks that get this type of volume are generally Tesla and Nvidia.
Yeah, and those are some of the craziest moving stocks out there in a good way. So I'm not surprised by that level of Bookmap activity. But good stuff there. And besides that, let's jump right into today's momentum plays. And with the first one, we have Boeing to the downside.
Yeah, Boeing falling off again. Surprise, surprise, getting really close to that recent low right around 151.60. So if they're able to break under there, then keep watching them down.
All right, with the next one, we have DAL to the upside.
Mike, the airlines have actually been one of those sectors that have been doing pretty good the past couple weeks as well. Very consistent price action. So if DAL can end up breaking above 49.20, then watch it up. But I will say this, as it rises, maybe use $50 as a target, because that's going to be a pretty good resistance.
All right, and now with the last one, we have Meta for both directions.
Yeah, with all that news today with Mark Zuckerberg and those glasses, I thought this was going to end up popping a little bit more than it actually did. If they end up pulling back under 566, then watch them back to the downside. But I will say I want to see a good intraday resistance break of 573, and if they're able to break that, I would enjoy better a play to the upside, we'll say.
All right, so we have the upside level for a potential move higher. We have the downside level for a potential move lower. That is for Meta. Delta. Don't forget about the upside levels with DAL, and then the downside levels with Boeing or BA. Either way, these three stocks are on watch for potential day trades tomorrow, only if they break through the levels Tom listed. The stronger and more consistent these stocks move, the better the setups become, and if they don't break the levels listed, then don't waste your time trying to force something that's not there. But those are today's momentum plays, and we are all clear for today's $1 million big money trade, and we are looking at ticker symbol APLD. Today, the big money bought the 9 strike call options on this one for November 15th of 2024. Technically, this is a call debit spread for our advanced traders out there, but basically the big money is bullish on APLD, and looking at the stock right now, it's gaining a lot of positive momentum. It's up over 8% on the day, and it's in the process of retesting some key resistance levels and highs from the past couple of years. Looking at APLD, and specifically this call options trade, it has some time to it as the options expire in the middle of November. The strike price of $9 is a little bit out of the money, but it's definitely reasonable given the volatility associated with this trade. Like I said, it is a call debit spread, so they shorted the 13 strike call option. So basically the big money is not expecting this stock to go any higher than 13. But I think this is a very interesting setup, and this stock has been a pretty crazy one over the past couple of years in a mostly good way.
Yeah, I mean, it's been actually holding up on support very well here around that $3.50 to $4 mark. Really consistent bounces. And on this recent recovery, it's definitely been pretty insane to the upside, that's for sure. I'll definitely be watching this one extremely closely, Mike. There is a little resistance coming up here right around like 8.50 to 9, but you know, the 9 strike call is not too bad. And a lot of times, like whenever we see a setup like this where a stock is kind of bouncing around support but curling back up, whenever it gets back after the base forms and it starts to finally get back up here, this could be like where we finally see that good break of that resistance finally. So hopefully this is where we're at with APLD. But at the end of the day, Mike, APLD is a pretty wild stock. I can't even believe these stats that I'm reading down here. The average percent rise is 6.4%. I don't know that I've ever seen a stock, unless it was like a straight up stock that was like 5 cents or something, that it has an average percent rise that high.
Yeah, it's a volatile one for sure. And, you know, just by looking at the chart over the past couple of years, like when it moves, it tends to move in some pretty strong ways in both directions, which is definitely a good thing for those who are long volatility. But either way, keep this stock close on watch going forward. But guys, as a key reminder, let's remember to trade in a way that is smart, disciplined, and uses long-term oriented trading habits. We say this all the time, but it's just so important, especially in today's market. The importance of following the money is crucial right now because the SPY is just chopping around. So whether you're looking at specific stocks like bank stocks or chip stocks or Chinese stocks or gold or whatever the case may be, follow the money. Trying to fight against the market's flows is something that is very tough to do, and it's not that rewarding. While, let's say, I guess you could say swimming with the market, swimming with the tide, it's important to have your stop losses set up in a way where even if the trade that you are playing works against you, that you'll be okay. This is one of the key reasons why we talk so much about having stop losses for every single trade that you take, so that even if it works against you, the loss will be kept to a minimum. We have a bunch of great information and tips and lessons in the Discord to learn more about setting up stop losses and other key long-term oriented trading habits. So definitely check it out. The link for the Discord will be in the description below, and a bunch of phenomenal information can be found in the key lessons channel. So take a couple minutes tonight and review that, and it can definitely help so much in today's market. But while we're in the Discord, Tom, let's also give a giant shout shout out to today's member of the day, Nick, who posted a phenomenal profit screenshot and some great gains. So Nick's only been in the community for a couple weeks now, but screenshots like this one are awesome to see. So keep up the great work, Nick, and hopefully we see many more screenshots like this one from you in the future. If you guys are new to the channel, consider obliterating the subscribe button to get our videos recommended to you more often. In every single video, we cover the most important news, information, events, earnings, chart setups, and data that you otherwise would have never seen. So stay up to date with the market and subscribe, and you'll see our videos recommended to you more often. Besides that, thank you all so much for watching, and let's have an amazing day in the market tomorrow.